Welcome to the Building Web3 Podcast. I have my good friend Jim from Superstate. He is the co-founder and head of business development. Real quick, for people that are unfamiliar with what Superstate is, give us the 2-minute elevator pitch. What do people need to know about Superstate?
Yeah, well, thanks for having me on, Jax. Superstate is in the RWA space. So we're an asset manager that builds financial products that interact with blockchains. Our team all came from Compound, and we've hired a bunch of just absolutely cracked engineers that are in the DeFi ecosystem that come from Uniswap and Compound and Frax, and have built a lot of really cool tools. But our goal is to build the next wave of asset management, which anybody from retail to institutions to corporations can hold and interact with. But instead of doing that in the old school Web2 way, throw it into the blockchain ecosystem and tokenize their shares so that they can do a lot more with it than what they would do historically. So we're about 2 years into our journey since we launched the business, got a couple $100 million in AUM, and we're just getting started.
Yeah, so for people that are unfamiliar, maybe they never worked at BlackRock or Morgan Stanley, tell them what is wrong with the existing asset management business.
Yeah, I mean, there's nothing wrong necessarily. It's just that it can be better. And, the good thing is that a lot of these folks are recognizing this trend. And you've got Larry Fink and Franklin Templeton and large institutions all the way through, big asset managers to banks that are realizing that the technology by which a lot of their systems are built on is just ridiculously archaic. These systems require a lot of people, a lot of spreadsheets, a lot of reconciliation. And because of that, they really only work from 9 to 5, Monday through Friday. And they're really, dragged down by speed and cost and access, and, efficiency is just not there. And so what we're aiming to do, and what a number of folks are aiming to do, is to just upgrade the same trusted financial products. There's nothing that needs to necessarily be innovated, or there's definitely always room for innovation. But on the structuring side, there's decades of history of legal compliance, operational regulatory vehicles that just make these products, whether they're ETFs or mutual funds or bonds or equities or whatever it is, that are extremely protected and have a high amount of disclosure and transparency for investors. But the way that people buy them, sell them, trade them, use them as collateral is really, really bifurcated and really, disparate across many different platforms and different systems. So you go to your IRA and you get a certain, list of options that you can put your retirement money in. You go to your brokerage account and you can only trade a couple, you can trade a bunch of stocks, but you can't, do everything else that you would do in your crypto account where you have access to Bitcoin and Ethereum. And then you go to your wallet and then you go to DeFi. And it's all these systems don't really speak to each other. But because we have this global open network of, Ethereum and all these amazing Solana and all these great public permissionless chains, you can now take these systems and have them interact with a peer-to-peer network that allows people to, replicate what they were doing in all these separate, really inefficient ways, and now do it in a much more open, integrated capital market.
But first, let's talk about our amazing sponsor, HiMapper, who helps make this show possible. They're keeping maps up to date in a really clever way. All you need to do is drive your normal routes with their smart dash cam installed. No extra routes, no extra hassle, just drive like you always do and get rewarded. Join HiMapper and keep the map fresh for everyone. And talk to us a bit about that. So when I used to work at BlackRock, it was there are a few problems come to mind. One is even though we had some of the more advanced systems, if anyone's heard of Aladdin, we had this tool called portfolio construction, but you talk to people and some really big portfolio managers would still be using spreadsheets for everything. Now, are you saying it's the tooling is the problem? Is it the time to settlement, the T+2 issue? Or are you saying it's hey, a lot of these assets, they're not really interoperable. You can't just go to one exchange and turn around a mortgage-backed security and, another kind of asset. What's kind of the issue you guys are honing in on?
Yeah. So it's a good question. I think there's, if you look at the investment structure or the structuring of an investment vehicle. Like you have, the legal regulatory side, you've got the operational piece, you've got, the investment, and then you have distribution. And like the distribution piece, I think is where we're really honing in on first from a technology standpoint, which is, when you have investors that want to be able to get access to vehicles, they are able to do so in a way that allows them to interact at any time through multiple venues. If the token is supported on one blockchain or another, and they have their wallets and custodians that are accessible on all these different networks, they can now like reach the same assets across multiple different networks versus having siloed systems to be able to do like their equities in one place and their bonds in one place and their like alternative assets in another place. That all can kind of be brought onto one platform. And then because you have a common area for multiple parties on the originator side, on the distributor side, on the secondary market side, like they can all interact and be used as collateral or to settle trades that like historically are being done in very, very bifurcated systems. So that's like the first part of it. Then you go like further down the funnel, which is actually taking the entire operational side of the asset management vehicles. So, because we have stablecoins now, processing transactions in and out of a particular product like a Superstate fund can be done 24/7, 365, as we know that stablecoins move much better, faster, cheaper, and quicker than what you do in like the fiat world, where you've got bank wire systems that only work certain periods of time. And then that is like the like money rails. And then separately, you've got the like financial product rails. And those two like don't really speak to each other all that frequently. So you have, a bunch of people in the middle office that operationally have to look at it and say, oh, this payment that came in, 3 hours ago is really for this account and trying to buy this product. And so like, once we check that all off, then 10 other people have to check that all off. And then we can say that this transaction has cleared. Well, you don't necessarily need to do that when you have this two systems in real time speak to each other. And so that moves us further down into the operational side. And then like when it comes to the actual like capital formation piece, like as you can bring more and more of like the underlying securities and the like products, whether it's like equities or bonds or currencies or whatever it is, structured products that can be natively issued on a blockchain, then that's the building block for everything I just described to be packaged up into new and interesting ways. And, I think like, there's been a proliferation of like the financial advisor world has like grown a ton over the last like couple of decades, where you have like all these mom and pop shops that like, sit down with you on like a quarterly basis and they go through and they say, hey, what are you trying to invest in? What are your goals and objectives? And they like rebalance your portfolio and give you a couple of options. Well, those are like, limited to what's in their universe. And I think, as like more systems get upgraded to like using blockchain-based systems, and like of course you like layer in all the development that's happening on the AI side, like you can now have a much more programmable financial portfolio that is custom tailored and always reacting to the best investment opportunities for you, that can autonomously or maybe not completely help manage your portfolio if you're an individual, a family office, a corporation, because you now have like the intelligence and the capital and the opportunities all on one kind of clearing system that doesn't require all that I described in like a bunch of manual reconciliation. So this like world of like, self-custody and tokenized assets, to me, is really like that's what Superstate is building towards. And like we are on one main focused end of this to like bring things on chain, and then that allows all the applications and other use cases to be built around it. But you have to bring stuff on first, and you have to do it the right way. Like our view from in day one when we launched our business was, let's go, raise the American flag, launch a business that's got a Delaware entity, it's got a New York based headquarters, and like really try to package up products that, rely on the SEC, the CFTC, and all the regulatory bodies around, financial instruments, and try to merge those products into a system that just has, the ownership represented on chain. And, that's what we're pursuing. We've got two different products, one of which is just sitting in treasury bills, and there's just a money market fund like of a return in that vehicle, which has a couple $100 million in it, and there's a bunch of different use cases for it. But then we also have a like crypto basis trade. So we've got Bitcoin and Ether cash and carry, where we're basically, buying spot and shorting futures on the other side to generate a higher return. So we have these like two models of, what a traditional asset can be like in a tokenized world, and then also like how do you take like more crypto native strategies, make it on chain, but also give that access in a regulated instrument to large institutions that require that type of investor protections from that they're used to in every other asset that they deploy in today.
So to advocate for the audience here, what I'm hearing and what I assume they'll be thinking about is it almost seems like a unification layer where it's like, hey, we have all of these disparate systems and all of these different ways of tracking like financial instruments, and we're going to bring them all into one, almost like centralized, but in a decentralized way where you have all of your instruments in one place. You could cash out your account at any given point, and you can also like post collateral. So you could use your, in theory, like a mortgage-backed security to do some other kind of transaction that historically would have been a lot more headache to use itself. And then you guys are also, what it seems like, creating funds that people can essentially like invest in on chain, and they're using crypto native strategies, but kind of geared towards a more institutional audience. Is that essentially what we're hearing?
Yeah, exactly. Like our USTB is our tokenized T-bill fund. So it just sits with a bunch of treasury bills that, doesn't look that dissimilar to your regular money market account. But the fact that when you invest in our fund, you get to tokenize your shares means that as you go onto Ethereum and in different protocols or use, assets on chain, there are compliance restrictions today on like how you use this product. But the network or the common platform that you're talking about is a blockchain that allows you 24/7 to interact with others and financial transactions. Like if you're owning a bunch of shares in a money market fund, and let's say that Jim and Jax decide to have some sort of transaction where I owe you, $100, I have to give that to you in cash, which means I go to my money market account, I redeem that, I wait a day, I get my $100, it's wired to my bank, I got to find your Venmo and then like send it to you on Venmo or whatever it is, right? Or I mint some USDC and I send it to you on chain. Like that is a lot of steps. But if you and I decide to do this transaction and you want $100 worth of my ownership in this money market fund, I could just send it to you directly peer to peer. Now, that's a very simple, like the two homies go to dinner and example. But when you think about larger alternative investments or even, traditional investments, there's a lack of interoperability with other participants in the markets that require a lot of friction for you to be able to transact. And so by having a common platform of a blockchain with a token standard that allows you to move assets permissionlessly peer to peer, it all of a sudden opens up a ton of use cases. And that's just one of them that we just described here. And there's a dozen others that we're building towards. But the common goal is, to your point, is to take, what are, legacy instruments that are very antiquated and just, and upgrade them with, better superpowers.
And then, so we kind of give the example of how like two friends would interact. What about we'll call them two institutions. Let's say like Morgan Stanley and BlackRock want to interact with one another. Because I think the big use cases ultimately will always be institutional.
Yeah, I mean, that's where we're geared towards today. So like Superstate's business right now is all institutions. We don't have any retail investors in our products. The investors that use USTB and USCC are large liquid and venture funds. They're crypto native banks. They're custodians that are, on chain with a bunch of money. They're DAO treasuries. But I think one of the more interesting verticals for us recently is stablecoins. So like a stablecoin doesn't necessarily want to be thinking about how they manage all their reserves. They want to be able to create this awesome stablecoin with a great distribution strategy and, all these different integrations to make their product as ubiquitous as possible for their investors. Well, they use us behind the scenes to be able to manage their collateral. And so as they raise, assets or mint more of their token, their stablecoin, they'll allow us to manage the assets behind the scenes. So they're now a distribution channel for people to be able to use the stablecoin in DeFi and peer-to-peer transactions. But going back to the institutional example, let's say that there's a large building that a pension fund owns in Chicago, and they've got a certain ownership stake that they want to be able to move to another investor. Like if that is tokenized, there can be a market that's built that's much more liquid and much more transparent for opportunities for others to bid, or you even use it as collateral to borrow against, that today doesn't not exist. Like it definitely does exist. These types of things happen all the time, but the amount of like lawyers and middle office folks and reconciliation that takes place in order for that transaction to happen is definitely not as efficient as it could be if certain pieces of what I just described are tokenized and embedded into the system where Morgan Stanley and BlackRock are facing off with each other. The rest of the world doesn't know that it's Morgan Stanley and BlackRock, but the underlying information is baked into smart contracts that facilitates the transaction between the two. And then ownership for the actual building is represented off chain underneath in title transfer and whatnot. That is kind of what tokenization is hoping to build, so that there's these new marketplaces and more liquid and transparent markets that can allow for these types of things that are definitely done in early 2000s way and not set up for the 2020s and beyond.
Yeah, let's talk about adoption, and we don't necessarily need to talk about Superstate, but you'll hear Larry Fink say hey, we need to bring everything on chain. I often do wonder from the outside looking in, how much are these institutions actually using things? So Chamath, as an example, on All In podcast was talking about how big businesses are now starting to use stablecoins. So what kind of adoption are we actually seeing from the institutional and the big business side?
I mean, stablecoins is number one. You hit the nail on the head there. Obviously Bridge being acquired by Stripe, and I think Collisons were out saying this morning about how basically every financial transaction will be on chain at some point in time, which is why they went out and spent a bunch of money on getting Bridge. It's just the infrastructure that enables for B2B, B2C or transactions. I think that's where you're seeing adoption, and it's clearly the case when you look at TVL, because if you see Tether and Circle and a whole host of other stablecoins, that's a couple $100 billion worth of assets in the ecosystem, and you can see the volume is pushing on the credit card network's volume. So there is a tremendous amount of activity that's happening there, and not all of it is I think it started out as, hey, we want a digital dollar to be able to have as the base trading pair for Bitcoin or ETH on a centralized exchange. Now it's I want to make a payment to some international entity or to workers in a different jurisdiction and do that in an instant fashion. That's where stablecoins are fantastic. And there's a whole bunch of design area that's being built there. When it comes to the RWA space, the real world assets, there's a couple of use cases. The Treasury bill fund that I talked about, there's a couple $1 billion in that today, and it's not a couple $100 billion. So it is still early days, despite the year-over-year growth, which has been tremendous. And you've seen a lot of large institutions. So BlackRock, as you mentioned, Franklin Templeton has actually been doing this for a while. Janus Henderson is getting into this. Wellington is getting to this. A number of large asset managers that, if you're from finance, you would recognize, are now building in this space. So that's kind of the next leg of growth that we're seeing. Figure also has been kind of in the markets for a long time. They're kind of a sleeping giant, I would say, in terms of how they've built. Their HELOC business is originating billions of dollars a month on home equity lines of credit that just use the blockchain to be able to bring these. It's a way more efficient machine for them to create the credit. I think what you're seeing though is you start with money on the lower end of the curve, then you move to treasuries, you move to short-term yield products, and you'll go further out the spectrum, private credit and whatnot that allows you to get more yield, maybe a little bit less liquidity. These are fast-moving systems, so starting at the bottom left of the efficient frontier makes the most sense, and then expanding out further. Eventually, those will start to be brought online, but you have to have the basic building blocks of capital markets, which historically have been dollars and treasury bills, and that's where you've seen the most adoption thus far. But from our conversations with either investors in our funds, which some of them kind of surprise you when you start to look at them, and you're well, you appreciate this for the technology, and clearly you recognize that more of your business, whether it's your corporate treasury or your fund, is going to be on chain. That's really bullish because there's again, sleeping giants that are investing in these types of vehicles that you would be surprised. It's not all just crypto native degens that are using these products. They're, now that stablecoins and T-bills are getting the traction they are, like the demographic of the addressable market is also expanding, which is exciting. But you're going to see a lot more. You're going to see a lot more happening in the next couple of months and years, which I think will show that what people have been talking about theoretically is actually being put down on paper soon.
Yeah. And on your guys' site, you guys talk about yield for crypto native investors. I think most people in crypto are probably already pretty familiar with yield. You can go on Pendle and see like just mind melting yields. I honestly, I don't dabble too much in those, but for people, is this more to get maybe like institutions into that like better liquidity, better settlement to give them some of the like taste of the yields that we've experienced in places like DeFi, or who's like the ideal target customer here?
Yeah, I'd say like, you have a lot of companies, whether they're on the like investing side or they're on the operating side, that are looking for yield just for their balance sheet. And they're not necessarily doing, leverage loop YTPTs on Pendle, which, obviously is an amazing market. And, but this is more like the conservative end of the spectrum of folks that are like, hey, I just sit on a bunch of USDC and I just don't want to earn nothing off of that. So I don't want to lend that to Compound or Aave because there's some smart contract risks and there's volatility in those interest rates. Like, it's just not for me. So I'd rather just like give it to Superstate so that I can earn 4.3% on it, which is the Fed funds rate. Like, know that it's in a bankruptcy remote trust and it has all the things that like I'm used to in a JP Morgan account, but it's just way better for me to interact with because the technology's sweet. And then you have like I was saying with some stable coins, like, we're seeing a lot of adoption. Like, so we're picked up by Frax, Anzen, M0. Like, there's a number of stablecoin issuers or infrastructure providers that are like, hey, we want to focus on building an awesome product and distributing and marketing and growing the like, the channels by which our clients use our stablecoin, but we don't want to manage any of the boring T-bill stuff. So like, you guys can do that and you can help maintain our peg and you do it very cheaply. So I get to keep a bunch of the yield, or I can pass that yield back to my investors. So it really like spans the gamut. And then like the last one I would say are like more like the degens, I guess, which like we have our basis fund is, it yields like the 30-day yield today is 15%. And that's, it's similar to the Athena strategy or to the Resolve strategy, but like, we trade term futures and we're onboarding, to be able to trade CME futures, which is like an institutional product, but you can actually take that token and you can go to Morpho right now and you can borrow against it and you can leverage loop it. So like, and I'm sure there'll be a Pendle market for that at some point in time too. And you can do this on a bunch of different chains and whatnot. So yeah, I mean, it spans the gamut, but like, it is not the like degen, yield that we're trying to package up. We're trying to do a much more institutional, maybe like lower risk strategy in the vehicles that we run.
Yeah, audience, it's surprising for me is I don't think about this stuff all that much. But yeah, if you got like, let's say YC invested in your company, you're like, well, I'm about to be sitting on, 500,000 in assets that are just going to be essentially idle unless you could get like about like 5% or some kind of yield on it versus pretty much nothing, which makes complete sense.
And you can get liquidity out of it whenever you need. So it's like, yeah, I've got, $2 million that I need to invest for the next year, but in 24 hours, if I need to redeem that and pay a bunch of developers or whatever it is to operate my business, like it's a money market account. So you can come in and go as you please.
Yeah, that makes complete sense. So tell us a little bit about the stuff that you guys have on the horizon. Like, what kind of milestones can people look forward to from you?
Yeah, so we're at 400 million, give or take, total assets under management. I think Superstate's going to be over $500 million really soon and heading towards $1 billion in the first half of this year. Some pretty big mandates that we're excited to announce in a couple of weeks that we've won, relationships with that we're growing out now, which is exciting. We've done a lot of partnerships recently, like I mentioned, with like M0, Frax. We just announced a partnership with Resolve and with Anzen, and there'll be a couple other large ones that are coming online. So we're becoming the like gold standard of get really good, high quality yield bearing collateral behind your stablecoin. Like that's one of the niche areas that we've been really focused on. We just announced a teaser last week, and I think by the time this episode drops, everybody will hear the news. But we're going multi-chain, and the first chain outside of Ethereum that we're launching on is actually called Plume, and Plume is very focused on RWAs. They align with us very much from like a institutional compliance, and just like product standpoint. And we're excited to be launching there here in a couple of weeks. We're hoping, they're aiming to go live, I think towards the end of Q1. And we're going to be bringing a bunch of our products to market with them. And that'll start the journey for us to go to Solana and Base and Arbitrum and you name it. We had to do a lot of work to kind of get this off the ground, but we want to be in every network that our clients want us to be on. So that's another exciting milestone. And, we've got two products, two funds that we run today. And, I think we'll be discerning in terms of like what the third or fourth or fifth fund will be like. But, by the end of this year, we'll have probably a wider array of options for clients across that like yield spectrum that I was talking about, so that, we kind of become a one-stop shop for, pick your favorite exposure, whether it's 100% in T-bills or it's 80-20 or 60-40 or 10-10-20 or whatever, like give you a bunch of different options for you to be able to diversify your assets, all with Superstate.
Absolutely. Well, we always like to ask one startup idea from each podcast guest, because we have got a lot of builders that listen to the podcast. I assume yours will be a institutional use case, but tell us about an area of crypto or of this ecosystem that you feel like is under addressed or will be really big in a few years.
I think Plume is going to do a good job with bringing a lot of RWAs together, but I think having a discovery mechanism for like where are RWAs trading and like how do I value them? Like, you could go to a bunch of different protocols and see like kind of the different markets, but it's some sort of an aggregator or optimized way to be able to rebalance your assets if you're using them as collateral or whatnot, specifically tailored to RWAs from like a compliance regulatory standpoint, will be huge. And you could call that an exchange, you could call that a DEX, you could call that like a lending protocol, but just like, basically take like matcha for tokens and, kind of run that strategy. I also, this is kind of an institutional answer for you, but it's also not. Like as a BD guy, would love a better CRM for Telegram. I feel like, I don't know if anybody has any suggestions out there. Maybe I haven't done my homework enough, but there's just so much information and relationships that like the directory of who to connect with and how your relationships are growing and better distribution on that platform, I feel like is becoming more and more integral, not just in the like degen world. Like there's a lot of people at banks and like large asset managers that I talk to that are on Telegram, and it's like becoming the new Bloomberg for crypto, where you have the ability to interact with folks. And today it's as a guy who manages a team, it's really hard to kind of see the activity and make sure that like we're doing all the things we should be doing and tracking that accordingly, especially from like a regulatory and business standpoint.
Yeah, well, I'll plug our friend. He's not. We've talked to him a few times, but the guy from 3RM, he has a CRM that would be great. I think another thing that I wish Telegram would add, or maybe someone could make a plugin for this, is like a verifiability score. There's been like 2 times people reached out to me from Telegram that just weren't who they were, and I was like, thank God I have like good wallet security, all that kind of stuff. But it's dangerous out there.
It is, yeah. I mean, like that's the directory side of it. Like, yeah, if there was some way to do that, because the best way to get around Telegram is asking your friends to make an introduction, and then they get you to the right handle. But that's not necessarily the most scalable way. I'm sure that there's a lot of a lot of folks hiding under rocks that we don't know about.
Yeah, 100%. Or like you'll be in a big group chat, like a more public group chat, and someone will reach out to them. Yeah, there's many ways. So people be careful on Telegram, but get your friends to introduce yourself. But if you want a building idea, I highly recommend building some kind of verifiability score. I also wonder what you think about maybe under-collateralization on chain. Like is that a reality we might get? Because I feel like everything on chain has to be over-collateralized because of the peer-to-peer network.
It does, and the part of it is because of the anonymity around like who's on the other side of it, and so underwriting is like almost impossible unless you get to see like all of their activity and you give them a health score on their wallet. Like there's just so limited of a picture that you get about who the risk is on the other end. I think like the Maple guys and there's a bunch of other protocols that do a ton of great work where they actually have more of a centralized underwriting and visibility into balance sheets and whatnot that they can help act as a service on behalf of the lenders to make sure that the borrowers are legit. And they have a lot of controls around where the assets move and what the margin calling process looks like and, liens on the rest of the balance sheet that's not currently in the protocol. So like totally decentralized, under collateralized is going to take a long time unless like you really get some of the right tech and like history brought on chain. But I'm not going to say never.
All right. Interesting stuff. Okay. So finally, where can listeners learn more about you, connect with you online, be it LinkedIn, be it X, and shout out any kind of social media you guys have?
Yeah. Superstate.co. You can check us out. That's our website. Our funds and team and everybody's listed there. I'm at Hiltner Jim on Twitter, or you can just look me up, Jim Hiltner on LinkedIn. Always happy to connect. And we've got at Superstate Funds is the company handle. So check us out. We've got some good stuff on there, and we'll have a lot of alpha for you to consume over the next couple of months with all the great stuff that we got going on.
Absolutely. Well, I'll put all the links down in the description. And everyone, let's continue building the future of on-chain finance.